Have you ever had a conversation with your grandparents or an older neighbor, or sometimes even your parents, and heard them say something along the lines of,
Back in my day, we used to spend pennies for a loaf of bread or a couple of cents for a bottle of Coke?
well, chances are we may have been able to experience those exact same things if it wasn't for inflation. Hey guys, just Vice here. So if you guys enjoyed today's video, please don't forget to hit that subscribe button, it really helps me out. Drop a like below if you enjoy what you see, and let me know in the comments below. On to today's video. Inflation. So what exactly is it? Well, simply put, over a specified period of time, the value of your currency will tend to decrease because of the simultaneous increase in the price of goods and services. So for instance, back in 1960, a loaf of bread would have cost you 5 cents. And now in 2020, that exact same loaf of bread would now cost you $3 to purchase. 5 cents in 1960, $3 in 2020. Now, other than the price, has there been a significant change in terms of the type of bread that you're buying or anything like that? Not necessarily. Inflation has caused the purchasing power of your money to decrease because of a simultaneous increase in the price of that loaf of bread. Now, if you were to take a current day paycheck, travel back in time, and go and land in the 1960s, odds are you would probably be able to live a pretty comfortable life. But if the inverse were true and you were bringing back a paycheck from the 60s, you probably would not make it too far in current times because of the price of goods. So according to Statistica Canada, a safe average to assume at a year-over-year rate of return is approximately 2.2% for inflation. So all that to say, if you were to drop a loonie under your pillow today and then hold on to that for a whole year, and 1 year from today, take out that loonie and try to go spend it somewhere, on average, you would only be able to buy 97 cents worth of goods. A year before that, you would have been able to buy a whole dollar worth of goods. Now that loonie still looks like a loonie, but then the value of it has decreased by about 2.2% in the year that it's been sitting under your pillow. So here's a shameless plug. Let's say you were to visit the link in my description, hit my Amazon affiliate link, and go and buy something on Amazon. Let's say you buy the book, The Intelligent Investor. Go and check out my affiliate link. So let's say you go buy that book today. A year from now, if you wanted to buy the exact same book, because of inflation, your dollar is going to be worth 2.2% less than it was the prior year. So inflation is now making you spend a little bit more money because the value of your dollar has decreased within that time. Moderate inflation encourages consumerism and also encourages people to save money in banks and invest and also watch their money grow at a higher rate of return than inflation is taking into account. When you're looking at saving your money in a high interest savings account, average banks offer about 0.01 anywhere up to 2% interest. So the bank is paying you pennies on the dollar for you to hold on to your money in their accounts. Now, if you're getting paid only about 0.02%, you're making less than what it would have cost you to go and spend that dollar today. So for instance, a lot of people turn to real estate or appreciating assets. Those will often have a much higher rate of return than your generic high interest savings account. And now for everyone's favorite time of year, not Christmas, not when you go and check the link in my description to buy all of your Amazon goods, but your annual raise. So let's say your boss comes up to you and tells you, hey, congrats, amazing work, I'm gonna give you a 4% raise. That sounds amazing because you're gonna get paid 4% more than you did the previous year in your following paychecks. But realistically, when you think about it, inflation is decreasing the value of your dollar by 2%. And by you getting a 4% raise, you're realistically going to get a 2% rate increase in the purchasing power of your dollar. Inflation is good, inflation is bad, but it's definitely here to stay. What can you do to make sure that you're beating inflation and protecting the value of your dollar? The first piece of advice that I would give anyone is making sure that your high interest savings account is making more than inflation. Often the mid-tier banks will offer you promotional interest rates anywhere from 2 to 3, even 4% interest. That means that you're making more than the value that your dollar is decreasing by. The second piece of advice I would give anyone is consider investing your money, whether that's real estate, a stock portfolio, or even just government bonds. You once again will more than likely make higher than that 2% rate of return that your dollar is decreasing by. I hope you guys enjoyed today's video, and all of my shameless plugs to go check out my Amazon affiliate link in the description below. And if you already haven't subscribed, hit that subscribe button, and I'll see you guys next time with a new and great video. See ya!